The market is confirming support at that critical resistance point.
From a slight drop to a massive downturn,
What we're looking at right now is a very strong signal at a very buyable level.
MarketBeat's Thomas Hughes has a list of 3 buy-the-dip opportunities that retail investors should be watching.
The outlook is very robust, and I see catalysts on the horizon. So I would expect to see the rebound potentially begin soon, early as next week, the week after.
3 plays where you can still find value in this bull market. Let's dive in. Tom, it's so great to have you back on the show talking about some buy the dip opportunities for retail investors. We talk about this from time to time on the show, but I think it's important to start this conversation with what really qualifies as a buying the dip opportunity, especially with the kind of bull market we're seeing right now.
Well, right. A stock dip is really relative to the stock that we're talking about and to the kind of market movement that we're generally observing. So there could be a price dip within a rally, the natural market movement, but the price might only dip for 1 or 2 or 3 or 5% in that instance, and it might not last very long. So it could really be a blip on the radar, could lead to a short-term consolidation. Still a dip, still a buying signal, still leads to higher prices. But then you have stocks that may have experienced a stronger headwind, a bigger impact to their sentiment, and experienced a longer term dip where they are trading near long term lows, possibly putting at a bottom, but in which case the recovery, the rebound outlook begins to brighten, and that creates a buying opportunity, another buy the dip scenario.
Well, we have 3 very different dip buying stories to go over today with the 3 stocks that you have for us. Let's get started with the first one that is a dip, but not a huge one. It's still a really big opportunity for investors.
Right. That's with advanced micro devices. I will say this is probably the strongest chart, strongest outlook, debt buying opportunity of all these three. This stock has been trending higher. It has moved off of its summer highs. It did make a sell off, a dip after its latest earnings release, but it's already confirming support, already confirming the uptrend. So what I'm seeing in this chart really is kind of a consolidation within an uptrend, should lead to additional higher prices. In this scenario, the summer uptrend may only be halfway over. But basically what happened, the Q2 results were a little tepid results. The revenue was not as strong as expected, but that was offset by really robust margins, earnings, and the guidance.
Yeah, let's talk about that dip that happened right after earnings. It's already recovered since then. So have we missed the real dip opportunity here, or is this still considered kind of a pullback for this company?
Traders and investors may have missed the low of the pullback, but with all signals and what we talked about before, it's really difficult to judge where the very low of a movement is. So what we're looking at right now is a very strong signal at a very buyable level. The candle action, the chart action this week shows a very strong doji, which is just where the market sold off real hard and then bounced back up to where it started from. The candle itself is very small, but it's got a long lower shadow, just pointing downwards and saying, hey, there is support here for this stock. So within this outlook, we might see advanced micro devices share price consolidate for the next few weeks, maybe for the rest of the quarter, but the outlook is very robust and I see catalysts on the horizon.
Let's talk about those catalysts a little bit. The earnings was a little soft, like you said, but they really still did meet expectations. They still had some strong indicators in some areas. Let's talk about what do you see in those earnings that gives you faith that right now is still a good buy-in point for this company, that there's a lot of growth ahead.
Well, right. So the weakness and the tepidness in Q2 was entirely related to China and sales in China. Some market participants may have been expecting the resumption of sales to already be impacting their results. Didn't happen. And then with the guidance is already forecasting that impact to disappear as soon as the current quarter. And the guidance does not include the resumption of sales to China. So, with that still in play, not only is the guidance strong, margins are recovering, the guidance could be cautious due to China, and there is also the even longer term outlook for AMD, which includes the launch of the MI 400 series next year.
I think the final thing to talk about with AMD is I'm curious to see, it's always been compared to NVIDIA. Is that comparison holding up? Is AMD in a market of its own? Are these companies really different? What What can you tell us about that competitive landscape for these companies?
Well, right, they're very comparable, but they're also still very different companies. NVIDIA has that first mover advantage. Its chips are far more powerful as far as raw computing goes, very central to infrastructure and training models. AMD's advantage, though, lies with its memory capacity and its efficiency, and it's better suited to these high capacity workloads and for inferencing. So next year with the MI400 series, we're also going to see them launch a rack scale solution, which makes them a viable alternative to the hyperscalers who will be moving into an inferencing stage with the AI race. So what we see happening next year is AMD beginning to take market share back from NVIDIA and really accelerating its growth.
Yeah, I think the concern on the AMD earnings report was that pullback for a second quarter on the data center revenue. Is that where the concern lies most with investors right now? And is there a chance that we'll see that data center revenue pull back up for the next quarter?
Yeah, I think that was a sticking point for the market this quarter, but as we can see in the price action, it really didn't have that big of an impact on the outlook. I think again, with the second part of your question, is just that with the outlook for the MI400, even if data center sales aren't as strong as we think this quarter and next quarter, they're going to start accelerating because of the outlook for inferencing, because of the outlook for hyperscale solutions, and it's just really a robust outlook for AMD.
Really good news for AMD. And I would imagine that increased demand in data centers and for the hyperscalers is also going to mean a lot of growth for many other AI growth companies, especially. If you are looking for that growth, make sure you check out our latest free premium report on the next 7 blockbuster stocks for growth investors. All of the stocks on this list really show promise for explosive long term growth. You can scan the QR code now or click the link in the description of this video to get that list totally free right now on marketbeat.com. All right, Thomas. So the first company on your list was definitely more on the bullish side of a dip buying opportunity. But the second company has a very different buy the dip story.
The second stock on the list is Hims and Hers. That opportunity is a little different because Hims and Hers has been facing headwinds with GLP-1 sales. They were a preferred provider of packaged solutions, and they're no longer, definitely impacting some of their sales. So in the chart, what we see is the market hit a top last year, early this year. That top has been in place, but support continues to rise. So the market is really moving past this headwind of GLP-1 sales and is being offset by core strengths, organic growth, and the growth outlook.
Yeah, let's talk about how long this dip could stick around for Hims. We've had a lot of viewers who've been interested in this stock for a while, and whether it's a buy opportunity or whether this pullback might still have room to fall further.
I mean, it could possibly fall further, but it looks like the market has already retreated to the firm support level, the uptrend line, based on past price action. This market's been pretty volatile, so I would expect to see the rebound potentially begin soon, early as next week, the week after, possibly take the stock back up to its high, to the critical resistance point before the end of the quarter. If we get some more good news at the next earnings report, then potentially see it move to new highs.
Let's talk about what analysts are saying, especially any analyst revisions after that news of the partnership kind of falling through for Hims. What are analysts recently saying about the future of the stock price?
Well, right. So the analysts are kind of a headwind right now. But what I see with the business moving past this headwind, the hurdle with GLP-1 sales, is an opportunity for the analysts to begin shifting their sentiment. They had been reducing their ratings, reducing their price targets. That kind of cap the gains, kind of plays into some of the volatility. But with the stage set for this company to continue growing at a robust pace, to move past this GLP-1 hurdle, the analysts should begin lifting sentiment ratings, lifting their price targets by the end of the quarter, potentially by the end of the year. That will definitely be a catalyst for higher stock prices, aligns with the outlook for higher stock prices, and should help support the uptrend.
Yeah, overall, just a quick look at Hims as a company. Do you think this business concept has enough potential to take this stock continuing to trend higher in the future?
Based on the metrics and the outlook, the plans for international expansion, I would say absolutely yes. The last report, despite the GLP-1 headwind, reflects increased users, increased revenue per user, which are providing a dual tailwind for leverage growth. That's only expected to continue. The company is expanding into new verticals, really trying to transition from being just a niche telehealth company to being more of a comprehensive wellness provider. So really has a pretty robust outlook based on that.
Any user data that investors should be aware of how I mean, I remember the story a couple of months ago was just that the number of users was increasing at a really impressive rate. Is that continuing today?
It is. It is. It's growing at a high double-digit rate and compounded by a high double-digit revenue per user count growth. So, like I said, it's a really strong, powerful tailwind for this company. It's expected to sustain a high level of growth and widening margins long into the future. So, it's really just a matter of moving past this GLP-1 headwind hurdle, which I see happening this year.
All right, a good look at HIMS and a good buying opportunity on a lower side for this company. Let's move on to that third company on your list that's more of a familiar name.
Right, that's Disney, and this is more of, a long-term reversal play. This stock, really tanked due to the prior CEO, sluggish growth, hurdles with profitability, the reduction of capital returns. Since Bob Iger took over, the stock market has been bottoming. The business has really been showing some traction. The latest action has the market pulling back since the Q2 release, but showing support at a critical level that to me aligns with a longer term market reversal, which is totally indicated by the business metrics and the outlook for growth, profits, and capital returns.
Well, let's peel this one back a little bit and talk about a little more into why this stock dropped. I think that's important for investors to look into to know if they think that the future could see some changes for this company.
Well, right. So Bob Iger has been Disney's, best CEO for decades. He was a prior CEO. He retired. I forget the interim guy's name, but he took over, had some really great ideas, did some good investing, but really ended up kind of muddling the business, impacted profitability, impacted the capital return, really impacted the stock price. He was asked to leave. Bob Iger came back. Since then, he's really been working hard to realign the business and kind of like rationalize what it is that his predecessor, the interim CEO, had done. So now what's happening is margins are being recovered, but also the entertainment and the streaming and the ESPN sporting business is kind of being consolidated and rationalized with new deals. There's a new deal with NFL for their assets and their media rights, which is really fantastic for them. They're going to launch a new ESPN direct to consumer streaming service. So this is really all great news for the company. They are experiencing headwinds with the consumer and with macroeconomic conditions, but they're still growing. And right now, with margins widening, they're set up to have not only a continuation of top line growth, but leveraged bottom line growth, which is really good news for investors, for capital returns, and for shareholder value.
This is a good story of the impact of a CEO on a company. Clearly, that shows in the stock price and the results for this company. What does the most recent earnings report show for Disney? Is there some hope on the horizon just based on those results?
Oh, yeah, absolutely. Like I was saying, growth was kind of tepid, but the diversified business, the two strong segments are offsetting the weak segment, still producing growth. And within that, system wide margins are improving. So we have tepid growth, but growth also improved margin and earnings power, which just, sets the company up to continue producing cash flow, continue building on its momentum, continue on its recovery and rebound, and with capital returns.
Let's talk about the weaker segments quick before we move on to the charts. I want to talk about which segments are the weaker segments and is there any hope for a turnaround in those weaker areas of Disney?
Yeah, so Disney operates in three primary segments. You've got entertainment, experiences, and sports. Entertainment and experiences is really the core of the business. That's the core franchises, the Disney princesses, the movies, and the parks. They're both growing. Entertainment was only 1%, but experiences is where the parks is. That's 8.3%, primarily on domestic strength, but that's the core business. That's really awesome. The weakness is in sports. It contracted by about 5.5%, but it is on track for growth. Like I said, they're really working hard to rationalize the business, consolidate what needs to be consolidated, trim the dead weight, and really set it up to produce revenue, but profitably.
Interesting to see. I'm curious to see what analysts are saying about all of those numbers and data points that you just dove into a little bit. Is there a positive outlook coming from the analysts?
Oh yeah, the analyst sentiment trends are very strong. They totally align with the market reversal. We've got coverage increasing. We've got sentiment is firming. The price target is rising. Right now, the consensus forecasts about a 15% upside, but the revision trend is leading to the high end of the range, which is another 10% upside, assuming that we get additional positive follow-ups to this report and the upcoming reports. I would expect to see the analyst sentiment trends continue to firm with additional upgrades, price target increases, and possibly a new high end of the range.
So analysts have a hope for the future, but what are investors doing? Let's get into the chart a little bit more. Have we seen any upward movement through this long-term kind of downtrend?
Well, right. So, like I said, the market for Disney stock hit a bottom probably about a year and a half ago, and since then has been moving sideways within a range. So, recently this summer, the market confirmed the bottom of the range, moved up above the critical moving averages, moved up above a critical resistance point, hit a multi year high, and has since pulled back. But now what we're seeing is the market is confirming support at that critical resistance point, which is also above the critical moving averages, and the moving averages are also showing a golden crossover. Golden crossover is when the short term moving average moves above the long term moving average and reflects a significant shift in the market dynamic, which in this case is bullish, also aligning with the outlook for a market reversal.
Well, thank you for the deep dive into the chart for Disney. I think those are all some interesting facts for investors to consider. I think I want to just wrap this up by just talking about buy the dip opportunities and trying to time a bottom. Like you've said earlier, it is a pretty impossible thing to do. But what level of a pullback, what level of a low can lead to healthy growth for investors? Should you be looking in this range or should you be looking for momentum? What are some of the different theories out there?
Well, right. So let me back up a little bit and answer this question a little bit differently than how you've asked it. What investors should do, right, is find stocks that they like, find indices that they like, markets that they like, and watch them on a day to day or a week to week basis so that you know what a normal market looks like. Become familiar with the news so that when a pullback happens, you know if it's warranted or not warranted. And in that case, you can say, these are my levels where I would expect support to kick in and wait for the signal to form at one of those levels. And when the market forms a signal, that's the right time to buy.
Always good advice as always, Thomas. Thank you so much for diving into these three companies for us. We'd love to hear from you, the viewers out there. What do you think of these three companies? Do you see a future for Disney? Do you think Hims is a good buy opportunity at the price it's at now? And do you consider this slight drop in AMD enough of a dip and enough of a pullback to get into the stock right now? We'd love to hear from you in the comments. Thanks again for watching, everyone. And as always, happy investing.